Hello investors, welcome back to your number one place for all your investing needs. So in today's video, we are going to go over all of my dividend payouts for the month in my dividend portfolio and to show you guys the power of the snowball effect in dividend investing. So in order for you guys to retire early and live life financially independent, where you can just sit back, relax, and not have to work at all. Now, before we get into all of that, can we smash that like button, guys? Can we get over 100 plus likes on this video? Please go ahead and smash that like button for me and subscribe to the channel so you get updated for all my content, and also turn on that bell notification so you get all my investing content in your subscription box. Leave a comment below letting me know what is your favorite stock, dividend stock, and also letting me know how much you received in dividends for the last month and comparing it to mine at the end of the video and seeing if you received more or less in dividends than I did. First of all, I'm going to go ahead and show you guys the portfolio, and then I'm going to show you guys how the snowball effect works, showing you my past dividend payouts that I received in the previous months, and then we're going to go ahead and look over all of my dividend payouts, and at the end of the video, compare it to the previous months and see how we did. Okay, so first on the list, this is the portfolio. So this is going to be our dividend portfolio that we have so far in the past year or so. We've been investing into this portfolio, buying different types of stock holdings, which I'll show you guys in my pie later on. And we go ahead and use the drip method by reinvesting automatically or manually, depending. You can do automatic right here by doing auto invest, where it automatically reinvests the dividends that you get paid out into the stocks that you own in your pies. Now, as you can see, my cash balance is $10.58 right there, which means I can go ahead and reinvest that into my portfolio, and that way I can own more shares. Now, three things obviously when you're looking at the snowball effect. The number one thing, the amount of money that you're going to be investing in the beginning. The number two thing, the growth rate of your investment, so the rate of growth on the investment that you have, how fast it's going to be growing. And then the third thing is the amount of time that you allow for the investment to grow. The longer time you have, the longer and better it's going to grow. So obviously, if you have 30 years, your compounding interest is really going to start destroying it towards that 25, 30-year mark. But if you only have 10 years, you're not going to see too many gains because you have a shorter time span. So just like that's why they call it the snowball effect. Obviously, if you take a snowball and as you start rolling it, it's small and small, but then as it goes down that hill, it's going to get bigger, and then really big at the end. Now, some people say that the dividend snowball investing uses the compounding effect of reinvesting dividends into the same investment to increase your future dividend payments with each reinvestment, and your shares grow slightly larger with slightly more shares, and your next dividend payout is going to be slightly larger than the previous one as well. So let me show you an example right now. So let's say we take that $10 and we go into my REITs. We have right here, we have the ticker symbol O, which is Realty Income. So I received dividends obviously into this from this stock. It's about 4.32% dividend. I own about 19 and a half shares, but I can tell you that I did not own 19 and a half shares, when I first bought, all these shares. So obviously I would go ahead and take that $10 that I received in dividends, reinvest it, and I would own about what 19.6, 19.7 shares of this company, and that means that I'm going to be receiving more dividend in the next one. So it's just compounding, and you're going to be receiving more and more in the future. Uh, Now, if we take a quick look right here, obviously, so like we said, the portfolio is valued at $27,432.94. We've earned about $554 in the previous year just in dividends on this portfolio. You can see that we really ramped up at the beginning of this year and started investing more, and that's how I got to that point. The second thing is right here. Obviously, this is going to be my dividend payout months chart that I've created for myself. This is not up to date. It's about 2 months old. I haven't updated all these percentages, but I update these as soon as possible as I can whenever I have a chance. But the thing I like this for is it shows me when each stock is going to pay me in dividends. So a lot of people like to set their dividends so they get paid every week or every month, or every 2 weeks of the month. So right here I can see, oh, okay, so we have ticker symbol T, which is AT&T. It pays out a dividend right there, and it pays out quarterly. So it pays out 4 times a year. February, May, August, and November. I got paid out this year, and then we can look at another company that pays monthly, like SPHD, which is an ETF. and they pay out every single month. They pay me out a dividend, so every single month I'm going to be receiving a dividend from them. And then we have other companies like this REIT right here, ticker symbol O, which pays every single month. But then you see how we have AT&T right there, pays February, May, August, and November. Well, some people like to switch it up and have a company like Store that pays out in January, April, July, and October. That way they're going to be getting paid 8 months of the year, and then they're going to try to get another one that pays out, in March, and then June right here, and then September, and then December. Kind of like this one right here, which is going to be J&J. So you would have 3 of those stocks, and that way each month you would get paid out in dividends just for owning those stocks. Now let's take a look at last month. So last month, if we take a look right here in July 2020, we received $46.12 in dividends. And now we're going to be going to August. Obviously, we're about a month behind because September just ended. So we have that month to also fill in, which I will fill in for you guys soon. But if we take a look, I received $46 in July, and the month before that in June, we received 77.99, which was the highest. I know in August that, I know how much I received, but in September, I can tell you that we definitely broke the highest record we have. So this is just a chart that I have for dividend passive income to keep up to date and just show you guys compounding interest and how it works for me. As you can see here, we started in April 2019. We received only $1.26 that month. And then the next month, $6, $9, $28, $10. You can see a pattern that every month I received more and more, or every 3 months, depending on the stocks that I own. But now you can see that I'm receiving much more in the last 3 or 4 months than I received, in the last year. So that is the power of compounding interest. All right, let's get into the list. So the first stock that paid us out is right here on August 3rd, 2020. It's going to be ticker symbol T, which is AT&T. And if we take a look right here, they paid us out $13.66. Now, if we take a look at AT&T, they have a beautiful, beautiful dividend. So they have a 7.22% dividend, one of the best dividends that I can find out there. Actually, with a nice company, especially since they have that 5G coming up into in competition with other companies like Comcast. AT&T is a great hold in my opinion, and market cap of 204.3 billion, PE ratio 17.43. They pay out a quarterly paying dividend, like we said, and they pay out about 52 cents per share. And we received about, like we said, $13.66 from that. Next up on the list, we have another one on August 3rd as well, 2020. We have ticker symbol VZ, which is going to be Verizon. So Verizon paid us out about $7.34. Verizon is another beautiful company, obviously, just like the previous one. And they're also competing with the 5G. So this one right here is a 4.15% dividend. So nice dividend right there, 245 billion market cap. And they're also quarterly paying dividend, another stock that pays out about 62 cents per share, which is obviously beautiful every quarter to receive that much. Next up on the list, we have one which it's not even really that bad. I don't even have that much of it in the portfolio, but it is on August 5th, 2020. It's going to be ticker symbol LOW. Now, this is a company that I recently added to the portfolio, which is Lowe's. So Lowe's paid us out only about 80 cents, so less than a dollar. This stock I picked up more for the growth, but it has a decent dividend, so I like the stock. The dividend is only about 1.32%, but with the growth that it's having, I think it's a good hold in my opinion. Market cap 125.8 billion. And this is also a quarterly paying dividend stock that is paying about 55 cents per quarter. And you can see right here, the trend. The stock was trading at around $66. Now it's $166. So the stocks went up over $100 in the past few months. After that, we have a stock that we actually recently kicked out of our dividend portfolio, but it's going to be on August 7th, 2020. Ticker symbol MA, which is MasterCard. So MasterCard only paid us out about 67 cents. And that is actually the reason we kicked it out of the portfolio, because the dividend is only 0.45%. I think that the dividend is very, very low for the value of the company and how big the company is. So I'd rather invest into companies like Bank of America or JP Morgan Chase, because they have a higher dividend and I like them better for the long term, even though MasterCard has a 339.2 billion market cap. And it pays a nice dividend right here. It's a quarterly paying dividend. It's 40 cents per share. But, like we said, it's only about 0.5% dividend, so I don't like that. But if you got it on the dip right here at about $200, it would be a nice hold to have in the portfolio. After that, we have August 14th, 2020, which is going to be ticker symbol ABBV, which is AbbVie. So AbbVie is a health company, and they paid me out about $12.10. This one is another beautiful company in my opinion. 5.35% dividend, 152 billion market cap. This one is another quarterly paying dividend. So you're going to see a pattern that a lot of my companies are going to be quarterly paying. They pay out about $1.18 per quarter. The stock was down here at a low of about $64. Great opportunity to buy, but it did make a high here about $100, and now it's making a pullback to $86. So this is looking nice for me, obviously, to add more and add more to the portfolio so I can continue to gain more actually in dividends in the future. So I like this dip that I'm seeing right here, about a 14% dip from the high, which is a great buying opportunity in my opinion for me. Next up on the list we have ticker symbol O, which is Realty Income. Like we mentioned earlier, they paid out a dividend of on August 14, 2020, and they only paid us about $3.24, but that is because this company is actually very special, and the reason it's special is because it's a monthly paying dividend. So it pays me out every single month, unlike Store Capital, they pay out quarterly, and it's also a REIT. So this one every single month is going to be paying me about 23 cents per share, and the dividend is 4.32%, 22 billion market cap. As you guys saw in the example I showed, I own about 19 shares of this company. So I'm getting 19 shares times the 23 cents. This company has much more room to grow, as it's not recovered yet from when the Rona started up here. It was trading at around $82, went down to a low of about $42. So it still has halfway, it recovered halfway. It still has more growth. So love this company, and I always add more whenever I can. After that, we have another company that I've recently added to the portfolio, which you guys saw in the previous month, which was on August 21st, 2020. The company is going to be ticker symbol SBUX, which is Starbucks. So Starbucks, another great company that I like in my portfolio. They paid us out about $2.18. Now this one is a quarterly paying dividend, so they only pay out 4 times a year. They pay out 41 cents with a dividend of 1.84%. Starbucks, I feel like they have so much more room to grow in the long term, with a market cap of 101 billion. This company, it's been stuck here since 2019 if you think about it, and it's still not at that high. So we need to break $100 per share and to see this continue to grow. So it was trading here sideways for years and years, and then blew up. That's what we need. We need another uptrend. So this stock, obviously, like we said, quarterly paying dividend. That we have another REIT. This one is on August 27, 2020. WELL, which is going to be Welltower. They pay out $6.10, which is really nice in my opinion. Another quarterly paying dividend. So this one pays out 4 times a year. They pay out 61 cents per share every quarter, 5.56% dividend, which is pretty nice. Better than Realty Income. With a market cap of 24 billion, the stock was trading down here at a low of about $33, high up here about $90 per share. So it still has about $30 to grow. After this Rona is over with, I hope that this stock can continue to trend up like it was in the past years. And then last but not least on our list is another monthly paying dividend. It's going to be ticker symbol SPHD. They paid us out on August 31st. 2020. They paid us out about $8.91. I love this ETF because it pays monthly. Like we said, it pays about 15 cents per share, 5.52% dividend. Beautiful company, $33 per share right now. It was up here about $43, so it still has room to grow. It was at a low of about $28, $27 right here. So it still has plenty of room to grow once the market recovers. And the dividend stocks in this ETF, it's a S&P 500 high dividend, low volatility ETF. So once these stocks recover, this one is going to recover as well. So this one is definitely another long-term hold. I like to add to this one every single month because this one is going to be very nice 10, 20, 30 years from now. It's going to pay me so much every single month, just in dividends. Okay, so now that we went over all of August's dividend, we're going to go ahead and add all the dividends, and then we're going to plug it into the chart and see and compare it to the previous months and see how we're doing. Went ahead and added up all those dividends, and the total is going to be $55. So we received $55 in August 2020 in dividends, and obviously we went ahead and reinvested that back into the portfolio. That way our portfolio grows larger, and that way we receive even more dividends because we're going to be owning more shares of the company. And that way, like we said, the snowball effect, in 20, 30 years from now, we're going to be receiving so much in dividends every single month that we're not going to have to work at all. We can just sit back, relax on our little ranch or whatever, wherever you want to live, on the beach, drinking your little, cocktails and just relaxing, being financially free. So that is the power of it. As you can see right here, August 2019, we received $10.55. So $10 to $55. That's over that's a 500% gain right there, 5x my investment or profit. So I guess it's already doing wonders just compared to last year. In the month before that, obviously $46 compared to $28, almost doubled right there. So it's doing very, very well compared to the previous years, and I can hope to continue to grow this. Our goal is to break $100, in a single month in 2020. And I can already tell you guys, spoiler alert, September is going to be very, very close. It might have actually done it. So you'll have to find out in the next video, obviously. So yeah, $55 in the month of August. Go ahead and smash that like button if you're still watching this video. Help out the channel. Leave a comment below. Like I said, what is your favorite dividend stock? And tell me how much you've received in dividends in August or in the previous month. And that way we can compare and see if you received more or less, and what are your goals with just compounding interest and just dividend investing in general. Now, obviously, guys, this portfolio, I'm trying to reinvest as much as I can, and also invest as much as I can every single month, or, multiple times a month if I can save enough money to add to the portfolio. We're always buying new shares. Like we said, we have multiple pie slices in our portfolio. We have the consumer, health, real estate, bonds and ETFs, utilities, telecommunication, finance, and logistics, which is a new one that we added not too long ago. The only stock I own in that one, obviously, is UPS currently. But all of these, companies, and all of these companies that are inside of these pies are just wonderful companies that have a bright future with very much growth to come in the long run, and that's why we own them. I don't really sell many of these companies unless I see something wrong with the company. If there's major news that is going to bring down the company in the long run, or if the dividend is being cut, or if there's a pause in the dividend. Obviously, right now with the Rona going on, that is a little. I guess you could say, it's a little bad time for the stock companies. But if a company is pausing its dividend just because of the Rona right now, I'm not gonna have any fear. I'm gonna continue to invest in it, because I know that once all that is over, the company is going to be healthy and back to growing. But the good thing is, lots of our companies that we own are actually increasing their dividends, and that is something we want to see in our portfolio, because that means we own healthy companies that are going to grow in the long run, and we have nothing to worry about. Like we said, with the snowball effect, there's only three things that you have to take into account, and it's the amount of money that you're able to put in right away, the growth rate of your investment, and the amount of time that we allow the investment to grow. So the longer time you have, the earlier you start, the better it is for you long term. Obviously, like if I was to have a kid right now, and I invested for them in a portfolio every single month or every single week, since the age of 0 to age 20, age 30, by the time they're 30, 35, 40, they're going to be receiving more dividends than I'm receiving, when I'm 30 or 40, because I had a late start, and I started later than they did. So they're going to be receiving so much in dividends, because of a choice that I made. And it's a choice that many people need to make for their children, because we want to leave something good for them in the future. So that is just the power of the snowball effect and compounding interest, and just dividend investing in general. So I hope you guys enjoy this video, and I hope you guys are also dividend investors. So if you are, smash that like button. If you're not, it's alright. You guys can check out my other videos. I obviously make videos on penny stocks, dividend growth, regular growth stocks, blue chip stocks, just anything that happens in the market, anything to do with finances. So if you guys enjoy that, subscribe to the channel, smash that like button, leave a comment below, and turn on that bell notification so I see you guys in my notifications next time. Goodbye.